Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer, and with me today is Hormaz Fatakia. Hormaz will be joining me in a bit. He's standing by the wall. A little later, he'll take us through all of the midcap stocks that are moving around in the session. But it's 1:35 p.m. this Thursday afternoon. Remember, it's the last Thursday of the February month, and it also means that it is the F&O expiry as far as the February series is concerned. Our markets look set to end the February series on a very subdued note, but the broader markets are the ones that are seeing significant amount of pain. In fact, if you look at the small cap index, continues to hover around with cuts of close to 1.7%, and the mid cap index a little over 1%, and 1.1% to be precise is the kind of cut that the mid cap index is seeing. The market breadth is very negative, with declines far outpacing the advances. But as promised, Hormaz is standing by the wall. Hormaz, take us through the list of stocks in the broader end of the markets that are seeing significant moves today.
It's a big yawning gap that you can see between the advances and the declines in today's session, and equally yawning are the participants on the Nifty as well on this expiry session. Hopefully the last hour or so might bring in some action as well. But we'll start off with the story of the day, and that is the cable and wire stocks that are seeing very sharp cuts on UltraTech's foray into this segment. KEI, Polycab, RR Kabel 17 to 19 to 20% lower. Havells not seeing as much of an impact, but still down 6%, as is Phenolics Cables, which is down to the lowest point of the day as well. On the flip side though, every single NBFC that you pick up in today's trading session is trading in the green, and that is after RBI's relief beat. Credit Access Grameen, that's up 13% now. AU Small Finance Bank, Chola Mandalam and 5-Star Business Finance, and a lot of these NBFCs are seeing some bit of relief after the announcements made by the Reserve Bank of India. Some of the other stocks that are in focus in today's session are those that will be seeing an exclusion from the futures and options segment, today being the last day in the F&O space, and they are seeing some unwinding of positions. PVR, Inox, Navin Fluorine. Mind you, these are just 4 out of the 16 names that will be excluded from the F&O segment. On the volumes front, there are very little names that are bucking the trend though, but Inox India is one of them, 10% higher on strong volumes. SRF, after some positive management commentary, is doing well. And on the flip side, Praj Industries is trading with cuts of around 5.5% on very sharp, on very high volumes. And lastly, some other names that are bucking the trend in today's session. Kirloskar Brothers is at the highest point of the day, 7% higher there, as is EIH, Bayer Corp and Bajaj Holdings too, having a good day at the office, gains of close to 5%.
Thank you so much, Hormaz, for taking us through the list of stocks in the broader end of the market that are making the moves today. And you've actually managed to find some green on the screen. Our market participants haven't been able to do that so often today. But now is as good a time as any to welcome Vinay Rajani from HDFC Securities for a technical check on the market. Thank you so much for joining us, Vinay. Where do you see the expiry? We have another couple of hours to go. Do you expect some bounce as far as the Nifty is concerned, or do you expect the indices to remain range bound?
Yeah, so good afternoon and thanks for having me on the show. So till now, derivative data is suggesting a muted activity in the markets, and we don't expect any larger movement on the either side as far as the derivative data is concerned. And the primary trend has been negative. Nifty has been trading below all moving averages, which indicates that the trend has been negative. So yes, the bias is on the negative side, but as far as expiries is concerned, it might remain between the range of 22,500 to 22,550. So we don't expect any larger move in the market. But overall, yes, we are, as I said, we are into a downtrend, and the support which we see for the Nifty is around 22,450, which happens to be the 76.4% retracement of the entire rally, which was registered from 4th June bottom to the all-time high. So that is a strong support we see in the Nifty as an overall trend, and this has been the 5th consecutive month where Nifty has been falling, and it has been quite a long time that we have not seen recovery. So let us see how it goes. But yes, there is a strong support at 22,450 according to our analysis.
All right, Vinay, thank you so much for sparing time. We could not take your stock picks due to paucity of time, but thank you for sparing time and joining us today on the show. Take a short break. Up next, we get you excerpts from our conversation with Akhil Ravi, who is the CEO of Aurigene Pharma Services, on the other side. Stay tuned. Welcome back. Now on the sidelines of the BioAsia Summit, Dr. Reddy's subsidiary Aurigene Pharmaceutical Services, which is involved in the Contract Research Development Manufacturing Organization or CDMO, offering truly integrated CRO and CDMO services for all the small and large molecules to global innovative pharma and biotech companies, spoke with our colleague Vinny on the CDMO opportunity and the growth potential. Listen in.
If you look at the global CDMO industry, it's roughly about 140 to 150 billion. India's size is only 3 billion. And Asia's size is about 35 to 40 billion. So if you see the growth potential of the industry is quite high. I think there are a few tailwinds which is potentially going to help the Indian industry. Number one, a lot of the Western companies are looking at redistributing their supply chains, both from US, Europe and China. China plus one seems to be a theme. It is played out in different forms and shapes. Second is there is a lot of pricing pressure with Inflation Reduction Act in the US and also likewise similar acts in Japan. So companies are looking to reduce the cost of their supply chain and manufacturing. And I think there is a growing talent base in India, especially with chemistry and chemical engineering. And I think a combination of these three factors is enabling the industry to grow. So I think that is the big potential for the industry. For us to be less than 3% market share to hopefully at least 10 to 12% over the next sort of decade or so.
This is for the industry as a whole.
For the whole industry, yes.
And for you, what are you aiming at the company?
So if you look at if this plays out, we are looking at roughly 14 to 16% CAGR for the next sort of 5 to 6 years for the industry. So as an aspiration, obviously, we would like to be well above that industry
14 to
curve.
16% at
right?
least.
So we hope to be at double-digit CAGR, compounded annual growth rate for the next sort of 5 to 6 years.
So around 20%.
Sure.
I could say that.
Yes.
At least. Yeah.
Yes. I would. I hope my CFO is not watching, but yes. But yeah, we would hope to be above this 15% CAGR mark, and that's our internal benchmark.
Sure.
Minimum.
What I want to know is the China plus one opportunity, which we talk about, and it's there across sectors. Some sectors it didn't play out as much as one was expecting. Is it playing out for pharmaceuticals?
Yeah, I think I'll break into two parts, right? One is there is already an existing supply chain which is there in China, right? And the Chinese manufacturing industry is very strong, right? I know there's a lot to learn for us from the Chinese industry in terms of their investment, automation, talent, skills, engineering, and so on. It is very hard in pharma to shift existing supply chains, which is where the product is already commercial in the market, and so on and so forth, right? What we are seeing more and more is when a new product is being discovered or new supply chains are being formed, then there is a preference to not have that in China. Right? I would not say it is 100% to all companies, but I think it is much more than what it was, say, 2 to 3 years back. So I would say that the expectations of the investors is probably overhyped today. It will take some time to ramp up, but it is happening.
Okay, take some time to ramp up, but it is happening. Yes. We are on that path.
Yes.
And costing-wise, also, would we be able to match that? Because that's a factor as well.
Very, very good question, right? If you look at structural factors, there are some structural factors where China is probably better placed than India as a whole. One, first and foremost, cost of capital is lower. And the CDMO industry and manufacturing industry is very capital intensive, right? Second is there's a very good supply ecosystem within China, where it is slightly cheaper than here in India, right? So they have some structural factors which make them much more competitive when you look at large volume, early stage sort of reactions. However, I think by combining our innovation abilities combined with our strong sort of talent pool, I think we can be at par, right? I would not say that we will be better in terms of purely on cost, but I think we can definitely be at par. I think if you look at it, customers also value other factors when making a decision beyond cost, which is on transparency, communication, openness, and I think that is there within our innate sort of service culture of our industry in India. And I think on those factors, companies are coming to India when they visit our facilities, they feel that okay, this is on par with any manufacturing site globally.
Okay.
Right. One of the customers told us when they visited our biologics facility that I could be in California or in Hyderabad right now. Right. So once they see the campus, see the facilities,
what we have to offer,
what we have already invested, I think then the companies are opening up, and that is where we see that as more and more companies come to India, they will see the opportunities there for them to trust us with their products, with their novel molecules as
so
well.
those inquiries are getting converted to clients, right? Because we know that everyone is getting a lot more inquiries because of China Plus One or what's happening in Russia. Everyone wants to move a bit and focus to other countries. Is that client being converted? Few companies have mentioned about it, that they are getting clients from US and UK. Is that happening for you as well?
It's a very good question. I think I would say inquiries on average are about 50 to 60% higher compared to the last couple of years, and we are seeing that consistently over the last few quarters. Conversions are happening, but in pharma they will be slow, right? What we are seeing is existing customers who already have established their trust with certain partners adding more and more business over there, and entering a supply chain for a new customer typically has a 1 to 2 year cycle. It is a combination of convincing the management, various audits, safety, quality, sustainability, various audits, and then you actually start the work. And then that's only the validation phase. The real money happens many years later. So I would imagine it to be a slow pickup, but it will be sustainable.
Slow pickup, but something once it comes in, they're going to be here because they trust you, and that's when your growth will also start increasing.
We also need to ensure that we invest in that trust, and that is something I think the entire industry is working towards.
Well, that was a very interesting conversation that Winnie had with the management of Aurigene Pharma, which is a subsidiary of Dr. Reddy. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, it's now time for another exclusive today. Our colleague Shilpa spoke to Kulin Lalbhai, who's the vice chairman of Arvind Fashions, and began by asking about the demand sentiment. Let's listen in to excerpts from that conversation.
I think generally we've had 3-4 quarters of the demand being on the subdued side. And I would say that if you ask me currently, we are not seeing any major breakout in terms of growth. But I do believe that with some of the decisions taken in the budget this year, and as we move into the summers, I'm cautiously optimistic that we should start seeing the impact of some of these decisions, because there has been money put into the pockets of the middle class, and I'm sure the consumption cycle will start building. Another thing I'm seeing in the market is whenever it's a market which is a little bit more challenging, the brands which are stronger and relatively are able to execute better tend to gain market share. So as far as we are quite happy where we are concerned that we've been able to have like-for-like growth which has beaten the general market averages. And I think we will continue to ensure that even in this kind of market, we achieve kind of the growth ambition we have set for us.
Speaking of footwear, there was some focus that you were putting on adjacencies beyond just apparel, right? Just wanted to understand what's the update there? How's been your growth strategy when it comes to growing adjacent categories for Arvind?
So that's one of our growth drivers. It's currently around 15% of our business, and we intend it to become around 30% of our business in the years to come. And within adjacencies, footwear is something which we are very excited about. That's close to 10% of the business overall for us. And we believe that this whole area of casual sneakers is an area we find very exciting. So in Arvind Fashions, we are now almost selling 2.5 million sneakers across our brands, and we're also planning to get into footwear manufacturing of sneakers because it's similar to garment manufacturing, which is our skill set. So we believe that an end-to-end exciting opportunity exists in the footwear sector, eventually maybe even for exports.
Right. This manufacturing that you're talking about will be for across your brands, any specific brand, a new brand for sneakers?
No, we are first planning to produce for our own Arvind Fashions, say US Polo, which is the largest brand. So we'll first produce for our own brands, and then as we expand our capacities, we would want to start then producing for the world, like how we do in textiles.
Shilpa there in an exclusive conversation with Arvind Fashions. We call time on this edition of Midcap Radar. The benchmark indices, though, are absolutely quiet. But what's not quiet, though, is the Midcap Index. That is down still over 1%, and the Small Cap Index has seen even greater pain. The Nifty Bank, though, is the one that's outperforming as of now. For the final 90 minutes, though, MF Corner takes you to the other side along with Closing Bell. But from Vivek, me and the team that put this show together, thank you so much for watching.